Taxability of stock divided. Kadalasan ng mga dividendo ng stock ay walang buwis. Hindi mo ito kailangang isama sa iyong nabubuwis ang kita maliban lang kung ibinebenta mo ang mga pagbabahagi, kaya ang halagang binabayaran ng cash ay para lamang sa nabubuwis ang kita. Stock divided versus stock split. Ang stock divided ay isang dividendo ng iyong binabayaran, habang stock split ay isang bahagi ng ratio na pinagpapasyahan ng mga kumpanya. Dividend Tax Rule. Ang rate ng buwis daw po ay sa mga hindi kwalipikadong dividendo ay kapareho ng iyong regular na bracket ng buwis o kita. Illustrative 1 and 2, magkagaya na po yun ang ibig sabihin. Pag sinabi po kasing dividends ay tubo po ng galing sa kinita ng isang kumpanya, yun ay pag may shareholders po ay edi hati-hati po sila kung magiging magkano po ang kikitain nila. Historical dividend tax rate. Ang background ng federal income taxes ay nagsimula sa pagpasa ng amendment sa United States Constitution noong Pebrero 3, 1913. Isinaad ng susod na ito ang the Congress shall have power to lay and collect taxes on income from whatever source without apportionment sa ilang estado. Ilang po, thank you.
Exempt dividends. Intercorporate dividends are received when a firm receives a dividend as a result of its ownership of another company's stock. Para maiwasan ng case ng double taxation, yung mga intercorporate dividends na nare-receive ng mga domestic corporation at resident foreign corporation mula sa mga domestic corporation ay exempted under the NIRC. Under the NIRC, this exemption also applies to dividends earned by business partnerships from domestic corporations. But the exemption does not apply to the dividends earned by general professional partnerships, exempt joint ventures, and exempt co-ownership, because they are not considered as corporation under the NIRC. However, due to the lack of specific legal exemption, the intercorporate dividend exemption does not apply to the share of corporation from the net income of a business partnership. The exemption is only applied to dividend declarations. Dividends from cooperatives. The distribution of dividends by an exempt cooperative to its member, whether reflecting interest or patronage refunds, is exempt from taxation under the RA 9520. Dividends from cooperatives or patronage dividends are profit payments made by a cooperative to its members. It is handed out as percentage of the company's profit. The amount of each member receive is determined by how much they use the co-services or how much they spent on products. Entities taxable as corporations are subject to 10% final tax. The 10% final withholding tax also applies to the dividends or share in the net income of entities considered corporation under the NIRC. Special laws such as number 1, Real Estate Investment Trust, RAITS, or Real Estate Investment Trust, are businesses that own a finance income producing real estate in a variety of markets. Number 2, business partnership. It is a legal form of operation between two or more individuals who share management and profits. Number 3, the taxable associations. These are the associations that are subject to taxation. Number 4, taxable joint ventures, joint accounts, or consortia. And number 5 are the taxable co-ownerships.
Business partnership, taxable association, joint venture, joint account, or co-ownership. Under Sec. 73, the NRRC, the net income of these entities is deemed constructively received by the partners, members, or ventures. Respectively, in the same year, the net income is reported. Means the 10% final tax applies at the point of determination of the income, not at the point of actual distribution. This is the profit distribution of the partners, Andy and Mar. The partnership profit distribution of partners Andy and Mar based on their agree profit distribution scheme is as follows. For the Andy, salaries to industrial partners is 40,000 and Mar is 0 pesos. For the Andy's interest to capitalist partner is nothing. Then the Mar is 12,000 pesos. And the bonus to industrial partner for Andy is 25 pesos and the Mar is 0 lang. Residual profit sharing for Andy is 8,000 pesos and the Mar is 24,000 pesos. Profit sharing of Andy is 73,000 pesos. Then while the Mar is 36,000 pesos. Assuming the salaries, interest, and bonus are not expenses in the book, the 10% final tax should be profit of Andy sharing is 73,000 pesos, then Mar is 36,000 pesos. When it multiplied by final tax rate 10% is 7,300 pesos for Andy and then 3,600 pesos for Mar. A partner, member, or venture who is an NRA, ETV, NRA, NETV, or NRFC should be subject respectively to 20% or 25% and 30% final tax rate. The improperly accumulated earning tax. Domestic corporations cannot avoid the dividends tax by simply not declaring dividends. Corporation which accumulated earnings beyond the reasonable needs of business. It will be imposed the 10% improperly accumulated earning tax, a penalty tax. Then this topic will be discussed in detail in Chapter 15B. Royalties. Passive royalties income received from sources within the Philippines is subject to the following final tax rates. It is source of passive royalties: books, literary works, and musical compositions. Other source. The books, literary works, and musical compositions is 10% final tax for the individuals and 20% final tax for the corporations. Then the other sources is 20% final tax in individuals and 20% also in final tax corporations. Under the regulations, the 10% preferential royalty final tax on books and literary works pertain to printed literature. Royalties on books sold on e-copies or CDs such as e-books are subject to the 20% of final tax. Passive versus active royalties. Royalties of a passive nature, such as royalties of claim owners or landowners of mining properties, royalties of invention from companies that manufacture and sell their inventions, and royalty from licensing agreements that transfer the use of trademark of technology are such to 20% final tax. When the royalties occurs from an undertaking where the taxpayer has active involvement is inactive income subject to the regular income tax. For the illustrations, ESOP also developed a utility program and assign it to a marketer which sell the utility program through the internet. ESOP received 30% royalty on each copy of the program sold. These programs were individually tailored to meet specific requirements of the establishment and required upgrades, occasional troubleshooting, and adjustments for problems. The developer received 1% of the sales of the establishment as royalty. The royalties from application programs are active income subject to regular income tax. The royalty from the utility programs is passive income subject to final withholding tax, but if the e-marker is not a resident in the Philippines, the passive incomes from abroad should be subject to a regular tax. Royalties, active or passive, earned from sources abroad are such to regular income tax. Share in business partnership net income. The share in net income includes the share in the residual profit and provision for salary, interest, and bonus to a partner. However, of the provisions of salaries, interest, and bonuses are expensed as such in the book of the partnership. Um, they are they are subject to regular tax to the receiving partner, not to not to final tax. In this case, only this share in the residual income after such provision is subject of final years or tax.